Hey there, traders. What's going on? Jamie Saettele here. It is September 30th, 2015. Last day of September, last day of the third quarter. Fourth quarter starts tomorrow, new month starts tomorrow. So we're going to start out by looking at the S&P 500. As we all know, no secret here, right? You've got uh, kind of, what I like to call all the same market, right? Hi, Raj. How you doing, man? All the same market. A TSM. In other words, it is the risk off, risk on phenomenon. It's not the same, obviously, as it was a couple of years ago because the euro has kind of taken on a funding currency role. So you do have, more the euro and the dollar and the yen as their funding currencies, which are more influenced. Although recently it's been more euro, to be honest, right? We haven't had nearly as much movement, at least tight correlation moves with equities recently in yen. Yen's just really in a tight range. Um, so we'll start with the S&P 500 just to get a general sense, right, of what's up. And I think that you'll see where I'm going with this as I go through the webinar, but the things we've been talking about for really the last month plus about that since the August 24th kind of crash scenario deal, if you will. Um, where I'll be going with this is talking about the Europe versus commodity currencies, which those shorts they look like they're finally ready to really happen. Okay. Um, in specifically like Euro CAD, Euro Kiwi, Euro Aussie, Pound Aussie, Kiwi K. You'll get where I'm going at with that. So let's take a look here first at the S&P 500. So if we scroll back, really there's not a whole lot of change as far as the long-term picture is concerned, right? We're still testing this absolutely giant level. Those of you that if you're new, this will be new to you, but if you've obviously been here for longer than a couple weeks, then you'll know what I'm talking about here. The really, really long-term slope idea being that this slope kind of, this magenta line kind of rules everything out there right now. In other words, as long as price holds it, you're okay on the risk on scenario, right? Once you break it, things get really nasty, or can get really, really bad, right? Because previous breaks of this line, barring some false breaks, of course, but previous breaks of this line have led to really significant declines and more or less crashes, if you will, in stocks. And we're talking about here's the end of the bear market after the tech bubble. Okay. And then, of course, the big one, the financial crisis, that level was resistance for so long. It was then support. We then gapped, had that huge gap, January 2008. It was then resistance. And then, things really, really fell apart. And then, of course, recently it's been support, right? It was support back in 2014 in October at that low. It was support, on a weekly basis, obviously traded below intra-week and intraday, but on a weekly basis in August 24th, the crash low, and it's actually just been support today and yesterday. Okay, so we have, and here's the line on the daily chart, same thing. So you can see we've turned up and talked about the analog that, since 2000 with 2011, right? February 2011 back here. Okay, 2011 here, topping processes are really, really similar. How long this lasts is anyone's guess. I don't know how long it will last. It's certainly, these things don't last forever. It's not like this is a map that's going to follow forever, but it is following so far. And, even talked about this, 2 days ago about the risk of this thing turning up sharply, right? And sure enough, we have turned up. So, that it has been useful for sure. And then when we look at the S&P on its own merits right now, right, I still would put big resistance. I mean, you did come into the median line here today, right? Um, but the big resistance is, you watch this sliding parallel, which is the 50 line, which is the high on the 25th. But really the big resistance is still this slope, right, which was former support, okay? It was the first resistance after the short covering rally off the lows. It was resistance afterwards. Um, And that would still be resistance, especially if it was reached, say, towards the end of this week and early next week, because you would have a confluence of slopes there too. Okay, so that's kind of where I'm thinking with the S&P. So what's that all mean when it comes to FX? Well, if we are indeed trying to base for a little bigger move in the S&P higher, again, up towards, the 1960s potentially even, okay? Let's see, Raj asked, yeah, I'll get to euro in a second. So with the 1960s up there, right, you're talking about a pretty sizable move. What are we currently trading here? 1908. So, 60 handle move can be reached quite quickly. We were already 40 off the low from yesterday. Okay. With that said, you're likely to see, in my opinion, some continued risk on trading, and that's best played by short euro against commodity currencies. Okay, go to a 60-minute chart here of the S&P 500. And you can see, let's see, 4-hour. Getting into the, kind of the overlap, if you will. See, on an hourly basis, is there overlap? Just about equal. So that's always a good sign. It's kind of what you'd want to see, hourly overlap on an hourly closing basis to kind of, get rid of the so-called, impulsive nature of weakness. But in this case, you have had a lot of overlap anyway, which, begs the question, is this larger move maybe even a triangle? Everything from the August 24th low, okay, which you get a bigger rally up towards where we're looking anyway. So the biggest thing to take away here is the analog one still suggests some strength, potentially the rest of the week, and the median line and the short and medium term would suggest that there's resistance, up near, again 1960s, 1970s. Right, 1960 is the month open for this month, for September. New month starts obviously after today's trading, but the big slopes up there, that's the most important. So if we do get up there, we're likely to see the euro continue to falter, which brings us back to the euro, I should say. Remember, lots of people have been calling for sizable moves in the euro, right? We've warned of a tight range, for a fairly prolonged period of time, and that basically since August here, right? And we've certainly gone to a tight range from the lows seen in early September. Okay, and since last week's low, it's gotten especially tight. I mean, just this week, here we are. We're basically unchanged. We're only 30 pips down on the month, or 40 pips down on the month right now, virtually unchanged on the week. So still holding the support, but I do think, a la 1997, that we can, do one of these kind of drifting lower deals, which this continues to follow pretty well, and at times it's been pretty accurate, right? So, if this rally here was maybe, yesterday or something, then weakness probably extends a bit, get another rally. Point is, it's likely to be really choppy. So potentially choppy decline throughout throughout October leads us to looking for a low towards the end of November, and that's when you really would want to start to turn super bullish the euro again. So, we came into this week, or I came into this week, kind of looking for a little more strength than we've seen, up towards the 1320s, 1370s, right? Talked about 23, I think, is the 50% retracement of this decline. And 1370, you got the high up here from the 14th. I think it was the 618. Not quite sure. Let's check. 618 is actually 1325, so that's in line with the highs that you had up here on the 15th and the 21st. 73 was something else, and I forget exactly what it was. But in any case, that is the area that I was looking to be short. So when I put in an order to go long 2 days ago, the idea was that the market was going to trade up into that area, right? And more, kind of closely follow the analog we're tracking. And then we'd be able to try and flip short up at that region because I was looking for the stock market to come into a low, as it has, right? But we're looking for that simultaneous high in the euro while the stock market came into a low. Well, that obviously didn't play out that way. We never even got triggered on the trade. Okay, and the euro actually only ended up trading up to 1280. 1280 has been pretty stiff resistance for the last couple of times. In fact, last week, remember our long, we were taken out at 1280. So, got to ask yourself, is that it? Right? Is that it? Are we headed back towards, breaking here, this area, this region? I don't know. I do know that if there were to be a rally up to the 1320s or so, then I would love to be short up into that up on a rally into that region, right? And we do have NFPs, of course, on Friday. So we'll see how that shakes out going into NFPs. Remember, NFPs will typically see a sharp move in one direction, and especially in current environment in which it's a range environment, it's oftentimes favorable situation for you or for the trader to take a short on a rally, or even a long on a decline. In this case, I would be looking to short at higher levels. Okay, so I can't say if euro is going to end up trading into the levels we're looking to short or not. We'll look at a shorter term chart. Let's see. That's euro CAD. We'll get to that in a second. This is Kiwi, actually. Okay, 60-minute chart. So here is an iffy slope, I'll call it, because not too sure that this is really worth working with at this point, but it does give you at least some point of reference, right? And then, excuse me, there are down slopes in effect, but let's say that the market, if it were to trade a little bit more in range here, and we end up popping higher up into this upper parallel and kind of traded in line with it up near the 1320s at some point. 1370s would be outside of the fork, but 1320s, and you get some hourly reversals up there. That's something that would present a pretty good opportunity for a short to take it lower throughout October. Okay, so that's just a thought here. Again, I wouldn't even put the euro at this point necessarily on a watch list, right? Because I don't know if it's going to get back up to this region or not, right? Heading into a new month, I've got levels in mind, as always, that I think are really important that I would want to be trading at. But you also want the market to have slope there, and you want the market to kind of confirm what you're seeing by either trading into that level and pulling off, and making an hourly or 4-hour reversal or something, and then you take action. So that's euro. We'll move on from this for a moment. And we're going to come back to euro crosses in a minute. I do want to look real quickly, though, at the British pound. Okay, so British pound. Oops. Okay. So British pound, real sloppy the last, 1, 2, 3, but the last 4 or 5 days. This thing's been real sloppy. Coming into support, I would put support basically here. I mean, you could say down to 50.89. Again, 50.89 is the low for May. It's also the 618 of this entire rally. So it's a big area, big confluence. Do kind of feel like pound's due for some sort of a turn higher. Okay, the momentum on the short-term charts is really, really petering out and looks terrible. The pound yen attempt on the long was kind of I was comfortable with trying the pound yen long for several reasons. I had mentioned yesterday in the post that pound yen had, coming into support, the median line, it was downtrending support, but still, um, decent support that we bounced at and seen really sizable bounces several times over the last few weeks, and watching for, kind of to get started on the long side. And, pound yen did end up trading up into, might as well bring the chart up. Pound yen did end up trading up into, above yesterday's high, which was kind of for me the alert, if you will, or the trigger that I'm looking for in order to get on the long side. And then the idea was to look for short-term support to buy, and we did all that, still didn't work out. So nothing's changed as far as me kind of looking for a bounce here, right? But it's as far as the setup or the trade, I just right now as of the second as I'm speaking, I don't really have it. It's not there, so it's okay. If you're going to be wrong really fast and move on. But as far as opinion's concerned, really not much of a change. Still would kind of expect a bounce higher. And, the strong resistance, probably 85.50, but 84.20 is an area that kind of go neutral because this is a broader downtrend. That is former support. It's been resistance before it was this week, or sorry, I guess it was on Friday. And it might be again. So that's, kind of my thoughts there with pound yen. If I'm going to trade to the long side on a yen cross and a European cross, it's probably going to be pound rather than euro at this point. Euro pound's coming into its own resistance. Talked about that, right? Long-term resistance here, showing failure at this point. So, remember a couple of weeks ago we were long, got stopped out of break even, but the implication was that a new high in euro pound would complete 5 waves up, right? So 1, 2, 3, 4, 5. Whether or not wave 5 is done, we don't know. Can zoom in and take a look. Not sure, don't know. But the risk of this thing turning over is certainly there. And we're already seeing it right now today. Okay. So for the, the near term, whatever, as far as trading's concerned, if you're going to try the long side on either euro yen or pound yen, I think pound yen's probably the better proposition than euro yen. Euro yen would still want to short it on any sort of pop, and that's one that we'll take a look at after I'm done looking at some of these dollar majors. Okay, so pound dollar. Let's get back to it. So I talked about pound dollar and kind of the easing into this support, if you will, right? And to me, I do think support extends a little lower, down to about 50.89. What I want to show is a different chart, though. And okay, here we go. So pound dollar, guess what? We're down 9 days in a row. Okay, we were down 9 days in a row at the low in September 4th, right? It ended September 4th, I should say, which I guess also was NFP day. So down 9 days in a row there. You got to go back. So this month or this year, this month we've been down 9 days in a row twice. The last time we were down 9 days in a row? The financial crisis. It was 10. That was a low. Okay, gave us a huge rally. Then we actually had, I guess, 12 in a row, right? And that led to a base, and it did lead to a pop, if you will. Wouldn't really call that much of a big rally, but it led to like a 300-point pop. Lots of volatility back then, so you had some huge ranges. The time before that, we had 9 days down in a row here, in July of 2005. And you got to go back decades before that happened. So something that really quite rare ended up happening twice this month. Okay. And you got to go back to 1995. In August of 95, that happened. And these are closing prices. Okay. But you can see even there, that was a huge low too. So, while my bigger picture kind of deal is actually bearish pound, it's really stupid to ignore something like this, in my opinion. As far as the 9 days down in a row, that alone isn't the big thing to me. What's big is that we're at a level I'd be looking at for support anyway, and then it's down 9 days in a row on top of that, right? And if we take a look at the momentum, you do have kind of a divergence here, right? Don't have RSI at a new low. This is 4-hour chart. Big divergence there too. Okay. So, if this thing can start get moving, Raj asking it is put in an hourly reversal. So I don't have anything yet. This would be an hourly chart, nothing. This is a 4-hour chart, nothing. An hourly reversals like this one, right? These wouldn't have worked. These wouldn't have worked. This one would have worked pretty well, right? So we don't have one yet. Not sure if there's anything on the calendar when it comes to, hourly reversals. Dollar CAD, we'll get to that. Raj, don't worry, bro. You haven't missed a darn thing when it comes to dollar CAD. If this thing's turned for real, there's a lot more to go on the downside. Raj says you're short. Nice, bro. That's awesome. Good to hear. So, give yourself credit, man. I can show you the charts and everything, but when it comes to, and I can give you ideas on trades and give you, throw out orders for you, but the real good ones, you got to trade to your personality, and if that's catching the turn, then that's good for you. So give yourself credit for pulling the trigger, bro. That's you. All right, so there's pound. So again, do like the idea of pound. Let's say that it doesn't trade to, let's say we just made a low. Okay, let's just, for argument's sake, let's just say that we made a low of some sort. And I don't know if we did, but let's say we did. All right, and let's say that the cable trades up above 152.12, which is the high that we had this morning, right? Okay, so let's say that it trades up there, and you're like, well, damn, I missed the freaking long. Well, don't worry about it, because one, the market's going to be here tomorrow, but what you would do is this, right? Let's say that you trade up here and market rips, right? And you'd be looking for, bullish slope to trade. And what I do, I have these daily charts, especially, the ones that I show you guys. But when it comes to, getting into a turn, look, sometimes you'll catch the exact turn, right? But a lot of times you'll either get snuffed out trying to do it, and it'll almost be better if you end up waiting for this thing to kind of make a high, a low, a high, kind of base a little bit, right? And then something to watch for or to do at the turn. You see the green average here. I know I've talked about it before, but it's a way to kind of, get into a trade when you're trading a turn. And this is the 24-hour moving average. So it's, kind of like a pivot, right? And once you get the turn, watch for that first touch of it, right? So in this case, turn down, first touch was resistance, right? So we kind of watch for that. That's a 24 SMA. I just use simple averages. I'm not big on the EMAs, right? So, same kind of deal. You get that first turn, watch for the touch as support. It's not always going to play out, of course. It's just an objective way to try to get into the position. Pound yen, we kind of did that today. I was watching, we turned, I was like, okay, we're turning, it's nice, and then ended up buying it like right around here, and took a stop, but whatever. I actually think this was the low, but I'll leave it at that. So in any case, just a little tidbit, little hint. You might want to play around with it. It's a 24-hour moving average, but this is not like a standalone strategy by any means. Okay, do not like sit there and like just trade a 24-hour moving average. This is something where I look at it because I know that we're at a big level and I'm looking for a bigger turn anyway. Like if you were to try to trade the 24-hour moving average, like every time it rallied above it, you'd probably go broke in a day. All right, don't do that. Rather, have the idea that you're at big support, which we are in pound, okay, and everything I've talked about over the last 5-10 minutes. Then when you get a turn up from there, give yourself, kind of, the plan to trade into the 24-hour moving average as support in this case, and try to hitch a ride on a reversal. So that's something to watch for there with pound. Okay, three other dollar crosses I really wanted to get into. Looked at euro and pound. Obviously, we'll look at dollar yen, even though it's not doing a whole lot. Dollar CAD and Kiwi dollar. Want to look at those. So dollar CAD. Okay, was that the top? I don't know, but got to say that it's impressive how the market's acting right at this level. Actually ended up yesterday's high was what, 34.57. That long-term fib is like 62, so 5 pips shy of it. And we have traded off and erased all of yesterday's advance actually. And again, same deal here, right? So we have this big area that we're looking for a turn. Just for fun, let's see what crude oil is doing. Oil's not really doing a whole lot. Again, still haven't gotten 42. We've been waiting a month for it, so I don't know if we will. This thing certainly coiled up for a move. Just isn't it interesting, by the way, to kind of think about this. If you read newspapers or turn on the news in the last week or so, you can't get away from the commodity carnage that's going on, right? And it's a huge bear market and there's deflation and this and that. The commodities have been bear trends for like 4 years, right? So it might be a little late to the game on that one. In fact, I think we might be in new uptrends in commodities. Sounds silly to say because dollar CAD topped yesterday, but you know what? Kiwi dollar topped a month ago, 5 weeks ago. Kiwi dollar ended up making a low. Okay. Gold made a low in July, still hasn't traded below that, right? Crude made a low, obviously, in August, still haven't traded below that. So, might be a little late to the game here, the mainstream media, et cetera, on the whole commodity deal. So let that kind of sink in for a second. And by the way, markets move the biggest at these huge turns, and look no further than what happened here. Okay, crude rallied from $38 roughly to $49. Okay, so that's to give you an idea. That would be like dollar CAD falling like 3,000 pips or something. I mean, that's not going to happen, but you get what I'm saying. You get big, huge moves at big macro turns. So getting back to dollar CAD. Here we are, 33.52, 100 points off the high. Let's kind of look at what we just talked about with pound. Okay, and take a look. Okay, so here's the 24-hour moving average, 34.07. This one's a pretty clean one to draw. I can already tell. It's got good scale. All right. So if we were to see something like, a drop here and then get a little move higher, right in the 24 moving average, probably could be pretty close to the upper parallel. Would give you a pretty awesome idea at entry. Okay. Of course, if you're already short, Raj is short over here, he says, it's good for you, and it just gives you, an idea as far as adding to the trade and managing the trade. Okay. Raj has a question here, dollar CAD. if the top is in for $CAD, how far can this pull down for reasonable targets? Reasonable targets for $CAD on the downside. Well, I will say, first of all, again, don't forget we did make a top yesterday, so I don't know if a top's in. I do know that I like trading it from the short side at this point. There is NFP on Friday, so beware of a Friday high. But I will say this. So here's the daily, okay? Your first big spot, as far as the big test on support is going to be the lower parallel, okay, as it should be. So that means this line here. Looking at horizontal levels, I mean, you've got the high over here, right? So that's 132.15. That's actually not for another week or so. You know, so a more immediate level to think about. $31.50 if things really fall apart. Here's a good, actually, this is something that I learned a long time ago, and I would like to share it because I think it's important. But rather than asking how far down it can go, just ask yourself, where's my risk? Right? Because you don't know. This thing could end up collapsing, or it could go sideways for a bunch and do nothing. Okay, or it could turn around and rip. I mean, those are pretty much the three scenarios. Given everything we've talked about with the, there's divergence here, there's crude oil's bottoming, talking about the commodities, et cetera, et cetera. And this is not a trade where you have like a measured target or measured objective. Okay, we don't have that, so can't give a measurement. A retracement, 61.8 is 25.06. 50%, 26.88. We just can't say. All right. Like, for example, this is pure speculation at this point because this is not correct to do. You could draw this. It doesn't mean anything because you have no idea if it's real. Okay. All you can work with is what you have. Okay. Well, then instead of Raj, he says it takes profit early, just lack of backtest, not knowing how far. Well, then don't take the profit early. Just leave your stop in and let it go, right? So like I would tell you that the first support I would watch is probably 32.70, but for this trade, I wouldn't get out of it until I saw what happens on the lower parallel over here, okay? And a former high, horizontal level 32.15. That might be an area to watch. You know, sometimes it's best just not to look at it and just let it do what it's going to do, right? You're in the trade. You have no control over it. You know that you've gotten in at a good price. Let it do what it's going to do, okay? I will tell you that I do think there's potential for a much bigger turn. You know, but I can't say how far. Like you need more information. We need more price information, right? So, you know, this thing starts to collapse. You know, we'll be watching for at some point periods of support and you know, it also comes with experience. Like if $CAD turns over and drops like 500 points in 3 days, and then you start to see news headlines about the Canadian dollar making a comeback, well, you know what? That's probably a pretty good time to get out of the trade. Okay, so I just can't say right now. All I know is that I like being short up here. That's about it. Let's move on to Kiwi, which is another one I like. So if you remember last week's webinar, right, actually talked about, that was right here. That was on Wednesday. Talked about how I had taken a long position on Kiwi as a kind of a punt, if you will. And I know some of you got in and followed on it. You said you did, but here we are, and we've kind of established a pretty decent bullish slope, right? So the plan here again, like here, so here, this is one actually that has a little more information at hand on it, right? So in this one, I can tell you that I'd probably be looking towards this black line here, which has been a really big slope level for quite some time. Let's see if I can scroll back and show you. All right, so I know this is like sloppy as all hell, but you can see the black line. This is kind of expanded, the original median line, the original slope, and kind of copying it and expanding it, which is a technique that I found quite useful. And you've had lows here. We've cut through it. We've had lows. We've had consolidation. We've had resistance a couple times on it recently. So, this is one that former support becoming resistance is bearish. This is one that we do need to, if this is going to stay bullish or something bigger is happening, then this thing we really need to, kind of cut through this resistance before you can get like real bullish on this thing. But again, if you got in at the right price, then you don't really have anything to worry about at this point because you're already pretty good in the money. So moving forward with Kiwi, I would still want to buy it if there was, we're at the median line here, right? So this is resistance, short-term uptrend resistance. You either would look for a break higher and then for this median line to hold a support, or you'd be looking for a sideways drift, consolidation, pullback, whatever, and looking for this lower parallel to be support, right? That's about it. This week's open, by the way, is, I believe, like 63, let's see, open, 63.70. So it's only 20 pips below where we are. So maybe you get support here, 63.70. I'll have to go through everything before I write this stuff later. But MLE right on Q asking about Euro Kiwi. And yeah, I wanted to cover these dollar crosses first, and then I'm going to get into those Euro against commodity crosses because I actually do like those trades better, which would make sense considering I kind of like the Euro lower, right? Albeit I don't know if we get one more pop, right? So there's Kiwi, light Kiwi long. This is the bullish slope to work with, in my opinion. We could be at the beginning of a much larger rally in Kiwi dollar. There we go. I think the weekly chart even shows it even better. Yeah, so here you go. So check this out. Here's the weekly chart, right? You've got this base forming, 2-week base. If we were to trade above 64.57, which is the high from 2 weeks ago, you'd have a target on that of 66.78, okay? And over time, 66.78, pretty close to these highs up here, and that runs into basically where former long-term resistance would be because it was former support before, right? So that obviously is like 400 pips away. So in this case, you asked like before about how low can Kiwi go, or sorry, how low can dollar CAD go? And I can't really give you an answer because I don't have anything super long-term right there right now, although I'm sure if I did some more chart work, I could find something for you. But Kiwi, I have the longer-term charts here. And I can tell you that I'd be looking for the first area of resistance, of like real resistance, probably not for another 400 pips. Okay. Now, that doesn't mean it goes there tomorrow. It doesn't even mean it goes there. It just, that's within the very possible realm, right? That's where it goes. And if it were to get there at some point over the next few weeks or whatever, then that would be an area that you'd probably think about selling it again. So, obviously still a lot of high reward to risk, proposition on Kiwi longs, which, resistance being that far away, we're at support now, have been for like 5-6 weeks. All right. Okay, so finally, dollar yen for the dollar crosses. It's obviously a super tight range, right? Made note of this fact last night, but you know what? The Nikkei, which is the JPN 225 CFD, made a new low for the move yesterday. There's August 24th. There's yesterday. That's a new low. Nowhere near a new low in dollar yen, right? That's divergence. When two markets move like that closely together, but one of them's doing something, the other one's not doing anything, something's up. Something's not right, right? Something smells weird. And in this case, it was the Nikkei. If you know the Nikkei, if these were both super, if we were in um, accelerating bear markets that were about to crash, the dollar yen should be down here, at like 115.50, when the Nikkei is down here. It wasn't. Okay, we actually haven't gone anywhere in the dollar yen. In fact, we haven't gone anywhere all year, more or less. Do you know that we opened the year in dollar yen? This is creepy. See this magenta line that goes across? Not the moving average, but this line. That's where we opened the year in dollar yen, 119.87. That quote right now is 119.89. After everything that's happened this year, you know, there's all kinds of crap going on in the world, blah, 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 blah. Equity markets, this and that, the average stocks in a bear market, and biotechs are crashing, whatever. Dollar yen hasn't moved. It's on the year, it's unchanged. If the year ended today, we'd have a doji candle for the year. Okay, that alone might be quite bearish because we've been in an uptrend for years. But, you know, that's me thinking real big. Raj, no, I am not. To answer your question, I am not. Okay, so what about here? What about dollar yen? What would I do here? Well, at the moment, nothing, right? So we were holding on. We were positioned for a crash. We got stopped out on Friday. Market came back, bounced yesterday. Trendline support right now in the middle of nowhere. Mentioned this yesterday in the post, but would be watching for support at 120.50, 70 perhaps. You know, this line here. I don't think it's going to be that great of a trade because look, if the S&P, if we're right on the S&P and the analog from 2011, and the big resistance is still higher, as in like, you know, we're going higher for 3, 4, 5 days and then going lower again, which I think is a distinct possibility, then I do think we get a shot at going short up above or near 122. Okay, and 122, by the way, is the 618, 122, or sorry, 121.80 is the 618 of this entire move down, including the spike. If you go to the 618 of the move down from the high up here, it's a little higher at 22.15. Okay, and then of course we've got these, you know, these lows over here at 22 and 22.40s. Don't think we get there at this point. If we get there, we'd be outside the bearish parallels. You do have highs over here at 122. That's the March high at 122.02. You've got the December high at 121.85. So, you know, there's a very good combination of slope as well as horizontal levels from previous really big highs, from like roughly 121.80, you know, to 122-ish, right? So if you can exercise patience and not, you know, worry about fear of missing out on a big decline in dollar yen every time it trades down to this trend line, you know, then sit tight and try to trade this thing on a short up into here. So obviously that's far away, right? We're at 1990 and 122 is not that far, or is, you know, not that far, but it's a couple hundred pips. So I mean, you could have a nice long into there. So why don't you just go long? Well, I mean, that was kind of what I was thinking today with pound yen, right? More importantly, the pound yen had its own setup, right? I don't like to trade like that. I like to say, well, dollar yen, if it goes here, then this means you don't know that. I just know that if dollar yen gets up here, it's a hell of a short. Okay. Pound yen, it's on its own merits, is at its own support line and kind of did its own thing where we were looking to go short anyway, right? Go long anyway, and we still might, right? I'll wait for the day to finish. After one trade is wrong in a pair, doesn't work out, I don't like to force it and try to trade it like 10 times that day. That's stupid. You'll end up just getting really pissed off and emotional about it. So don't do that either. Just wait for the day to finish. It'll be there. If it's higher or lower at the end of the day, not a big deal. And, you know, try to figure out how to take advantage of anything if it's there. But dollar yen, love the short up into 122. So you can see these things are all kind of telling the same story right now, right? You've got S&Ps looking like they could follow that analog, well, they are, but if they continue to follow that analog from 2011, then that means we go higher for a few more days and then go lower again. Okay, dollar yen set up beautifully if you think about it, with the S&Ps in mind, because if that were to play out, which look, the analog's been following really closely at times, so there's no reason to suspect it's not going to play out, right? I mean, we've been following it, and it seems to be working out well, so you might as well follow it. And if we got the strength that we were thinking about in the equity markets, then over the next few days, then we're going to have a great short into resistance up here in dollar yen, around 122. But now let's move on to the Europe against commodity currencies, because these are the trades that, like, I think are kind of ripe for the picking right now. Oh, Ali asking about Aussie. Yeah, so I actually don't have, the reason I'm not looking at Aussie, I just don't have a lot there, right? I don't want to force anything. I mean, there's nothing to change here. This is a chart that we've showed for a long time, weeks, I guess, but it's still really long-term support. But Kiwi is just a lot better right now, right? Like, Kiwi's acting a lot better, so I might as well, focus on Kiwi rather than Aussie. It's just that's the thing. I think Aussie goes higher here. Okay, you got this old resistance acting as support. Nice move higher, maybe A, B, C, look higher. Okay, but Kiwi's acting a lot better, so that's why I'm focusing on Kiwi. Now there is a cross, and it's Euro Aussie that we'll look at. Okay, so here's Euro CAD. Last week when we talked about Euro CAD, and really for the last month, we've been talking about resistance up near the 150, 190 figure, right? We never actually got up there, still haven't, even with the rally we had yesterday. So here's the one that's really marked up. So here's Euro CAD. This is more of an academic thing right here I'm going to show you, but whatever. There's complex corrections, okay? Remember I said last week something about if you can count the correction that it's done, and we talked about A, B, C, and then we were looking for a 5-wave move to the highs. Well, we got a 3-wave move, okay? So in this case, what that is called, and again, this is semantics, it doesn't really matter in my opinion, it's just whatever, it's there, it's knowledge. So 3 waves up, 3 waves down, 3 waves up. That's not known as a complex correction, and it's labeled WXY. Okay, so in this case, there's also we have an idea of how low this thing can go. Okay, and here's the weekly chart. In this case, we actually draw a 100% extension. And I know it's iffy using the spikes, but you know what? We're going to use it right now. So 141.95 is actually where we'd be looking. So that's, some 700 points lower than where we are right now. 41.95. Okay. So 41.95 Euro CAD. 40.40, 200-day average is actually right there too. Year open is 40.39. So if we look at the short-term picture for this thing, for Euro CAD that is, same deal, okay? You've got an impulse down. It's pretty clean actually. So you want to be watching for a short-term rally, and this is a thing you can. This is one to trade now, like, as in sell the next rally, okay? Because we have, I said, like again, I said if you can count it, it's done, right? Or it might be done. At least you have a better idea. In this case, we do have 3 up, 3 down, 3 up. Okay, so ABC, ABC, X, ABC, WX, Y. And then this is 1, next rally 2, so on and so forth. And then the strongest part of the decline comes next. So here's the 240-minute chart. Levels off the top of my head to look at a short is probably going to be 150 to 150.60 or so. Again, this is something that'll be much easier to to trade once it's kind of set up. Once you start to get a pop higher, then you're going to look for a counter trend move. Fourth wave of 1 degree is 150.40, so that's in the range too. But yeah, bottom line, we'll be looking to short EuroCAD on any sort of bounce over the next couple of days. Okay, could be a really, really solid position that takes us a lot lower. Another one that looks pretty good, and this is, obviously I said that I don't have a whole lot on Aussie, but Euro Aussie actually is a lot cleaner than Aussie dollar itself. And we've been looking at this one for a while too. Yen, dollar yen, pound yen. Okay, this is a chart that we were showing a while back, right? This one we actually did get the levels yesterday. If you remember, we talked about the reversal close level, right? High day close, daily reversal support. It was also a volume level. That was 162.24. Well, we got yesterday, we got a high at 62.50. We've obviously come off hard. So this one is also set up for, again, this is a range. So, coming from the top of the range, you're going to be looking to take this lower. Be looking to take this lower towards the bottom of the range, and eventual range break here is going to open up the next directional move based on the weekly chart and everything. Remember, this was the weekly. Okay, trading at big resistance up here on August 24th. Trend line support still going to be a lot lower. It's not as clean as a setup as far as where you think it could go is EuroCAD, because EuroCAD, we got the 100% extension. We've got a clean 5 waves down and 3 waves up, 3 waves up being a complex correction. But Euro Aussie, we do have just as good an entry, in my opinion, right? Because we traded into the high volume level mentioned at 62.24, reversed pretty sharply. So Euro Aussie could be one to watch as well. And then, of course, Euro Kiwi. Put what you're bullish Kiwi, bearish Aussie, put those two together. And this one, just a simple trend line off the lows from April, crosses through the lows here. We actually just broke that today. We had a break a couple days ago. It was a false break, and here we broke it again today. So I'm looking lower here against 179. I'll be looking for resistance probably up near 176. Don't know if this slope means anything yet because we haven't really traded on the median line yet, and I like the market to trade on the median line before I really start to pay attention to it or trade it, put money behind it. But given the outlook, if you will, on Euro and Kiwi separately, seems to make sense. And here's another one. This is a weekly chart. Again, this goes back years, back to 2012. And, the spike that we saw in the Kiwi crash was, of course, insane. But, if we take away that spike, look at where the highs have come in, right? The high here, right on the upper parallel. This is a really good slope to follow. This is long term, but you know what? It can be pretty precise. I mean, look at all the support you've had on this median line, okay? Resistance up here. So you got a ways to go for a pullback in Euro Kiwi as well, right? So pretty excited about what's going on here with the fourth quarter and some of these crosses. Absolutely love the, potential for really, sizable declines in Euro Aussie, Euro Kiwi, Euro CAD, with Euro CAD and Euro Kiwi probably being the two best ones at the moment, and that's really where I'm going to focus. I know that some of you are probably going to want to trade like the pound CAD and whatnot, and that may very well work out too. Not saying it can't, but with Euro Pound coming into its own resistance as well, I'd rather stick kind of with Euro, with the Euro crosses at this point. And absolutely Euro Yen, I was going to cover that anyway. I'm glad you reminded me. I kind of forgot. So Euro Yen, I actually think I already have a chart on that. So here we have Euro Yen, right? There's really no change here. Still want to trade. I know the patience is difficult, but still want to be short, and I think it's going a lot lower, Euro Yen. Right, here's the weekly chart. We talked about a potential for could be a topping pattern for the ages, 2 years in the making. Top here, December 2013, top December 2014. Top a little early, June 2015. Are we going to get another top in December 2015? I don't know, but here's the shorter term picture, 4-hour chart. Still could have A, B, C three-wave rally. If we do, this lines up really nicely with 3580. So still have, resistance up at that region. By the way, we've hit 2 4-hour reversal levels in the last couple days. Again, those reversal levels, right? Just the close of the low bar. And you can see here, close was support, close was resistance. Okay. There you go. Resistance, support. Now, things like this are really kind of impossible for me to point out, all the time, but you can certainly, for short-term trading, even if you're, not bullish Euro Yen, but you see it coming into, a level like this, 133.62, especially if it's, right in 9 to 10 o'clock around 10, 11 o'clock around, the options fix or the European fix, then you might get, kind of a rebound off that. So Raj saying you still looking 135.80. I don't know if it's so much as looking to 135.80 as much as it is saying that if the market traded there, I'd want to go short, right? Keep in mind, you want to trade on bearish slope, right? And that's not just bearish slope up here, but it's also a fib. So combination is beautiful. So if we got that, then we're looking lower, okay? And again, Euro Yen is a little tricky right now to get a hold of because Euro and Yen are kind of moving together, right? So whether or not this plays out, I don't know. But if it starts to play out, then heck yeah, let's do it, man. Get ready. Just, know where the level is. Know that 35.80 is the spot. Write it down. Know that you want to short if it gets up there. Okay, especially if it's over the next few days, because that's kind of where we would actually have some sort of an intersection with the Fibo 61.8 of this move down and sliding parallel. So that is Euro Yen. Okay, take a look at gold. There was some questions here about gold. Okay, so gold, I think, is coming up on a level that you're going to want to know. 1107 and a quarter. Okay, so again, this is the daily reversal, support and resistance, and you can see the closes, right? Close here is resistance. Close here, this is your daily reversal support. Okay, that day right there, that's 9/11. September 11th, 2015. The close that day is 1107 and a quarter. Happens to intersect trendline support, basically, tomorrow, Friday, whatever. So if the market kind of meanders around, doesn't do a whole lot on Thursday, you might be watching for that slam down lower on NFPs, but into a low for gold. Okay, that's at least what I would be watching for. You do have to say at this point that we haven't changed the macro behavior in gold yet, okay, because you still have a very well-defined bearish structure here in gold, all right? Market has traded into resistance multiple times and failed, okay, and it's failed on a very precise plane. The big move, in my opinion, is eventually going to be higher, but you got to let the market prove itself. Okay, and so far it's failed every time it's gotten up to resistance. If you're really long term, then you're going to want to take a look at the weekly chart. I've showed this many, many times. It's on the long-term page, but you'd be watching for support continuously on this line, which isn't that far from 1107 anyway, because we're kind of getting towards those lows, right? That's all right, Ali. Hey, man, you know what? Eventually, when you hold on to the next one, I think it'll probably do it. But yeah, I know it's tough, but manage the emotions and just kind of like throw everything out the window, what you think. That's what I got to do. No matter what I think, I want to be bullish gold, right? I think that the market's going higher and it's real sexy to have a long position down here. You got to stick with the support and resistance level. So when it gets up to resistance, at least take some off. I don't know if the market's right here, 1107 and a quarter is the levels I'll be looking at. Yeah. Yeah, it looked like it wanted to break, right? No doubt about it. So anyway, watch that level though. Okay. 1107 and a quarter is a biggie. Raj asking what trades you in at the moment. So I'm long Kiwi still, short some dollar CAD. Actually took some Aussie CAD on the short side. I hadn't really updated the chart in a while, but I know that we had traded up into some resistance. 61.8 level here, 94.25. And I don't forget about this one. I still think that Aussie CAD could eventually absolutely fall apart. So, yeah. But again, this is one that I have like this is a stop that is like super wide. This is like a position trade type of deal. I've got like a 97 something stop on it. So, I don't even want to look at it. Just kind of forget about it. Let it do whatever it's going to do. One day I'll wake up and I'll either be stopped out or it'll just continue to go lower. All right, so that's it for now. Our big takeaway here, we're following the S&P closely still, think it can go higher for a couple days at least. If it does, we probably get pretty good juice in dollar yen on the upside. I say probably because you don't know, right? They haven't been that tightly correlated of late. Would be looking at shorting 122 area if given that chance. So that means that some of these yen crosses could be all right on the upside. Aussie yen, Kiwi yen, CAD yen, whatever. Those are probably your best bets. For me, would rather trade it through euro. In other words, be short euro CAD, be short euro Aussie. We've got euro CAD. We've got, like I said before, we've got such a clean, beautiful. Here's euro. That's euro Aussie. We've got such a clean, beautiful count from an Elliott wave perspective, and we also have the slope, which seems to be failing. I mean, look at this. We're failing, shy each time now. The last three rallies have failed shy of the median line, but the last two have failed shy of even the upper parallel. So that tells you that this thing's in a pretty bearish spot. Ali asking what's the count? Yeah, so the count. So this is what I'll get detailed here. Why not? Let's try it out. Okay, so we've got wave one 2, then 1, 2, 3, 4, 5. That's 3. Then 4 is a flat 5. Okay. Then we've got an A, B, C, but it's really W, X, Y. Okay, so it's A, B, C, A, B, C, and A, B, C. And when you have a complex correction like this, which is ABC, 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 the entire thing is actually just labeled W, X, Y. Okay, that's how that works. And then if we want to go to the next degree, and this is where we start to get sloppy, we probably have something like this, where it's like, you know, A, B, and then C going, you know, much lower, right? So you can see this is kind of the path I'm thinking. And then on the short term, this is probably 1, you could go all day, right? And then 2, etc. So you kind of be looking maybe like this, and then, you know, something like that. Okay. So that's kind of ugly. Oops, didn't mean to do that. So let's see. Those drawing skills. All right. So that's where I would be looking at with Euro CAD. Don't forget, do have some potential for a bounce. Still have support on this chart. Just my opinion is that it doesn't hold because several reasons, but the wave count for 1, momentum for 2, host of things, right? The way dollar CAD looks, the way Euro dollar looks. So Euro CAD, great place to sell any bounce, in my opinion. Have more on that in the post later tonight. Okay, so that's it for today. Going to call it a day here for the midweek strategy webinar on September 30th. Okay, so everyone have a great rest of your week. Hope that you got something out of today and that it was useful. Fourth quarter coming up next 3 months. I think we've got some pretty solid opportunities ahead of us. Okay, all right, so thanks again. Everyone have a good one. Bye.